Now, when it comes to dividend growth investing, whether you're investing into something like DGRO ETF or even VIG, the VOO ETF, or of course SCHD for an example, it's very tough to know which ETF is going to be the perfect fit for you as a long-term dividend growth investor, and that's because although there is quite a bit of overlap when it comes to these different dividend growth ETFs, they all do offer something unique in their own way. But in this video, we're going to go over one of the most important metrics that I think especially a lot of newer dividend growth investors seem to miss, especially when it comes to comparing some of the top dividend growth ETFs out there. So if you consider yourself a long-term buy and hold dividend growth investor, make sure to stick around, drop a like down below, and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So like I was sort of saying in the intro, whether you're a dividend growth investor investing into something like VYM or DGRO, VIG, VOO, or SCHD ETF, these ETFs are for the most part good foundational ETFs that overall have a strong basket of holdings, are pretty cheap to own, and offer dividends and dividend growth historically. But maybe one of the most common things I see across the internet, especially for newer investors trying to figure out which one of these ETFs are going to be their foundational position, is a lot of investors struggle to compare these ETFs and always forget about one extremely important metric. Now, the metric that I'm talking about specifically is total return. Now, within total return, there's going to be multiple different things that make up the total return of a stock or ETF. Now, for one, we're talking about capital appreciation. It says capital appreciation refers to the increase in value of an investment over time. So for example, if SCHD was trading at $60 and then went up to $65, the capital appreciation per share would be $5. This component of the total return is often the primary focus of investors seeking long-term wealth accumulation. But capital appreciation is not the only aspect of total return. You also have to look into the dividend income. And this is the portion of a company's earnings that is distributed to shareholders in the form of dividends. This income source can provide a steady stream of cash flow for investors and contribute significantly to the total return of the portfolio. Now, like I sort of touched on a second ago, whether you're investing into any of these different dividend growth ETFs, even though they all offer a lot of things that are going to be similar, these ETFs are all different in their own ways as well. For a quick example, SCHD has a trailing 12-month dividend yield of 3.38% and has some pretty massive dividend growth historically. Now, contrary to SCHD, the VOO ETF, the Vanguard S&P 500 ETF, only has a 1.35% trailing 12-month dividend yield, and although VOO has raised their dividend consistently over time, it has been a little bit of a slower rate than that of SCHD. But just wait one second, just because VOO offers a smaller trailing 12-month dividend yield and has had maybe a little bit smaller dividend growth historically, this of course does not mean that the VOO ETF is worse than that of SCHD. Which is truly the main reason on why I want to make this video and talk about total return, because this is an underappreciated metric, because a lot of investors just focus on things like capital appreciation, or a lot of dividend income focused investors only focus on dividend income, when the real thing they should be focusing on is both of it, all of it. Total return is very, very important. The last thing that sort of applies to what we're doing here, because I assume a lot of you guys are dividend growth investors, is reinvestment of dividends and interest. So the reinvestment of dividends can enhance the total return of the portfolio by allowing investors to purchase additional shares, which can generate even more income and capital appreciation over time. So this is basically saying that if you have dividend reinvestment turned on within your portfolio, let's say you're buying shares of VOO on a daily basis, and then over time, those shares of VOO are going to pay you dividends, and then with those dividends, you buy, let's say, more shares of VOO. Now, obviously, the compounded effect is going to take off because you're basically buying more shares with money that the shares paid you. So now that we're all on the same page here, we understand what total return is, and we're talking about capital appreciation as far as ETF price in this example, along with dividend income over time. So for this first example, just to give some perspective, this is just price return. This is just capital appreciation, and we're comparing the ETFs DGRO, S&P 500, SCHD, the VOO ETF, VYM, and VIG. Now, just as a quick side note, I personally think that any of these ETFs could be a great foundational position for any long-term dividend growth portfolio. And although pretty much all these ETFs will get you to where you want to be long-term, like I sort of mentioned earlier, there are different ETFs like SCHD, for example, that is going to pay more in dividends from day one. But there's also going to be other ETFs in here, like the VOO ETF, which could have potentially a lot more upside. Based off of price return alone over the 1-year time frame, DGRO is up 13.7%, where the S&P, the benchmark's up 27.2%, SCHD is only up 8%, VOO is up 26%, VYM's up 12%, and VIG is up 16%. So once again, this is just price return, and over the 1-year time frame, VOO is in the lead, right behind the S&P 500. Now in a longer time frame, remember this is just price return. We're not looking at total return just yet, so the dividends are not included just as of yet. But in the last 5 years, just as price return goes, S&P 500 is up almost 80%, DGRO is up 54%, SCHD is up almost 48%, VOO is up 81%, VYM is up 38%, and VIG is up 63%. But now this is definitely where things get a little bit more interesting. Now if we use total return as the metric, so again, this is price return plus dividends included over time. Not just how much the ETF went up over the last year or so, this is dividends included. So this is going to be a little bit different. So on the 1 year time frame, with everything included, dividends and price return, S&P 500 is up 27.2%. On the 1 year time frame, DGRO is up almost 16%, SCHD is up over 11%, VOO is up 28%, VYM is up 16%, and VIG is up 17.8%. So as you can see, once dividends are included, things get mixed up a little bit more because some of the names on this list do pay a decent juicy dividend from day one. But stretching the time out a little bit further, this is where things really change. S&P 500 once again is up almost 80%, and this is over the last 5 years. Now DGRO is very close behind at 73% with total return. SCHD is up almost 75% total return, VOO is up 96%, VYM is up 62%, and VIG is up almost 78%. So in the 5 year time frame, if we look at total return, which is price return plus dividends included, we see that VOO, although VOO doesn't pay the biggest dividend from day one, the VOO ETF still is in the lead, and this is over the last 1,827 days. But what's also interesting is that some of the other ETFs that lagged a little bit farther behind, when we were just using price return, now that dividends are included, the numbers definitely moved up a little bit. Now, of course, because we went over just a few time frames, and also certain ETFs on this list have not even been around all that long, it's really hard to know exactly what the performance of each of these ETFs are going to do long term. But at least as far as these time frames, it looks like the VOO ETF might be one of the best long-term buy and hold dividend growth ETFs across the entire markets. Now, it goes without saying that just because VOO has the biggest total return doesn't necessarily mean it's the #1 most ideal ETF purchase for every single investor out there. Investors like myself that are a little bit more focused on dividends and dividend growth, but also want some long-term appreciation, might be interested in things like SCHD or even DGRO or VYM. But all in all, the numbers definitely don't lie. And as far as on a total return basis, every single one of these ETFs have done very, very well, at least over the last 5 years, if you ask me. But now, most importantly, I want to hear from you guys down below. If I were to ask you out of VIG, VYM, VOO, SCHD, and DGRO, out of all these ETFs, if you could only buy and hold one of them forever, for whatever reason, which one would it be and why? Drop the ticker symbol in the comments down below. If you enjoyed this video and you want to see more videos like this in the future, make sure to subscribe, and I'll see you in the next one. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.